Hello everybody, I'm Abasud and today we are going to discuss about the procure to pay corresponding to SAP audit. So let's start with discussion of the risks which is corresponding to this process. So first risk is duplicate payment. So SAP can warn users if payment appear to be duplicate and there are three-way match which is invoice, receipt and purchase order. Ensure that payments do not exceed what was ordered and what was received. However, not all payments go through this process and duplicate payment checking is rudimentary. Additionally, organization running multiple instances of SAP may find standard functionality inadequate to prevent duplicate payment if care is not taken to establish effective monitoring procedures. Next is overpayment. On the surface, the risk of overpayment can seem minuscule. In reality, however, overpayments are a common occurrence in many organizations, whether due to the complex rebate or discount agreements, mistakes when acting PO pricing, or multiple and inconsistent contract agreement across disparate geographical regions. And the reason for overpayments are many. Given that entire service industry focuses on payment recovery has emerged, the existence of overpayment is another but abnormal. Next is discount not taken. Many contract allows discount for early invoice payment. Discount terms can be complex. However, the employer may not always select the appropriate term on initial contract entry. Additionally, failure to enter information into SAP in a timely fashion can result in discounts being missed, as can documents blocked for posting that are not cleared quickly. Next is inability to reconcile invoices to purchase order or good received. SAP contain a strong matches functionality. However, ineffective purchasing or receiving procedures can make it difficult to tie payment to the order to which they apply, particularly if partial receipt become a factor. As a result, available discount may particularly be partial receipt become a factor. As a result, available discounts may not be fully recognized. Payable balances based on vendor liability can become questionable and supplier relationship can become damaged. Next is payment made for damaged shipment. SAP controls that govern invoice payment require that all relevant data be entered into the system in a timely manner. In some organization, the quantity and quality of goods is not verified upon receipt, resulting in payment that, while often recoverable, could be prevented. Next is liability not recognized when occurred. So this is kind of while this risk is primarily affect the financial reporting cycle, unrecognized liability can be directly result of a ineffective process in procure to pay cycle. SCP records uh, accounting entries on shipment of goods. However, these entry does not affect liability until the payment document is created and blocked. Receiving of payment documents, among other condition, can prevent creation of appropriate accounting entries. Next is PO changes not sufficient to security. So this is SAP can configure through a release strategy to require specific control procedure before a PO can be processed. However, PO changes after initial approval may not go through the same level of security if SAP is not configured appropriately. Next is inaccurate vendor activity reporting. In this stage of business intelligence management, decision around product pricing, vendor utilization, purchasing policies, and corporate expenditure is depend on the accuracy of information. Data quality issues such as duplicate vendor can screw reporting and decision making. SAP contains numerous control to help maintaining data quality. Last is a fraudulent transaction. So if we look for the report of a association of certified fraud examiner, estimate that the corporate on an average incur the 7% of revenue loss because of the fraud, they, whether they're associated with contract manipulation, vendor kickbacks, fictitious vendor, or even diversion of otherwise legitimate payment. The existence of fraud in purchase to pay process or procure to pay process can have a notifiable impact on profitability. Basically, purchase to pay and the procure to pay, this is a single process. So thank you. This is what we are having corresponding to the P2P risks.